Amid rising concerns and panic regarding the return of fuel subsidy and potential fuel scarcity, the Group Managing Director of the Nigerian National Petroleum Company Limited, Mr. MeleKyari, has come forward to address these speculations. He firmly debunked rumors of fuel subsidy being reintroduced by President Tinubu, emphasizing its relegation to history.
We have seen very few states, pockets of very low queues, not only connected with the road situation that we are seeing. There are a number of blockages on our road, crossing products from the southern depots into the northern part of the country. And it takes a much longer time than they do now. They have to reroute the trucks around many, many locations for them to be able to reach. And that created delays, and that created some supply gap, but that has been filled, and we do not see any of such problems again. And secondly, because of the full deregulation that we have in this sector, marketers are now competing amongst themselves. So one, you must have noticed some fuel stations will reduce price by 2 naira and 3 naira. So customers will naturally run to the places where you have that reduction in prices. And that creates panic, because for those who don't know why they are doing it, they will think that there's something wrong happening, or there's an ominous sign of scarcity and people start queuing up in the fuels. Otherwise, there is no challenge. Supply is robust. We have over 1.4 billion liters of product in our hands, both marine and land. And also that there are no issues around delivery of those products into the land. So there is no fear, nothing to bother about. But we're also happy that the market forces are now playing out and marketers are competing. And of course, there are a few issues we are engaging them to resolve alongside other agencies of government. And there are critical issues around access to foreign exchange. And we, as you all know, government is doing so much to ensure supply of FX into the market. We know that these FX markets will stabilize. Current A&E window is around 770, and we know that those inputs that's already happening, the inputs of government today will crystallize, and also they will come to an equilibrium position in the FX market.
To give more insights into this, I'm being joined by the founder and chief consultant at B. Adedipe Associates Limited, Dr. Biodun Adedipe. Thank you so much, Dr. Adedipe. It's good to have you on the program this afternoon.
Thank you so much for having me. It's always a pleasure having conversation with you.
Thank you. I think I should just start this way, Dr. Adedipe. With the present price of crude, as a layman, my understanding is that the landing cost of PMS as at today is more than the amount I'm buying it at a pump. And it seems like something is happening somewhere. Can you make us understand the economics behind this landing cost and what we have at the pump? NNPC GMD says no subsidy, government is not paying, but some questions just need to be answered.
All right, thank you so very much. I think to make it very simple, now where we are today is that we import 100% of the refined products that we consume in Nigeria. That means we buy refined products from international markets, international oil markets, which means then that once the price of crude oil goes up in international oil markets, certainly the end product of the refined products will become also more pricey. So if the prices go up, it then means bringing them into Nigeria, the landing cost will go higher by that element. That's element number one. The second element is the fact that you import this product, which means you need foreign currencies in order to pay for the products you are importing. And if the exchange rates relating to those trading currencies of Nigeria, major trading currencies, we call them, also, Naira weakens. It means you need a lot more Naira to buy the same quantity of those foreign currencies that will bring you the same quantity of refined products you used to buy. So it means two major factors here: the exchange value of the Naira and the fact that crude oil has become more expensive, what they call the input into the process of refining the products. So that means that in the period we are in now, it has become more expensive bringing the products in. That means the landing cost is now higher than what it was when we began implementation of subsidy removal, okay? So but what this also means is that ordinarily, if this were to be allowed to filter into the pump head price of refined petroleum products, consumers should be paying higher. That's the economics of it. That's assuming nothing changes within the pricing template. That means every other element in there, and let me put it straight, that the landing cost reflects the two things I mentioned, the price of crude oil primarily, and of course the exchange rate. Between those two, they account for about 85% of what you and I are paying when we drive into a petrol station to buy PMS, all right? So which means even if every other cost is waived, the best we can have is 85% of what we see today at the pump edge when we buy fuel. So it then also means that if we are to allow pass-through of the landing cost we are looking at today, then we should be paying more at the petrol stations. Then we are not paying more. And why is that so? And this is what I want Nigerians to please understand. We may choose not to call it subsidy, but I would rather call it intervention, which any reasonable government anywhere in the world would do. It is happening as we speak in many countries in Europe. It is happening in countries in the Americas that are talking about the North and the South. So it's a global phenomenon that the price of energy has gone up all over the world. So governments are intervening. They don't call it subsidy. So the real issue for us here is that there is an intervention somewhere that enables us to continue to buy petroleum products at the same price we had before the international price of crude oil started going up. That's the basic economics of it, which of course we have been abreast with for over 30 years. In this our argument about oil subsidy removal. That's the reality. So far as we are still importing, we can't escape the reality that subsidy removed today will come back in tomorrow if any of those two variables changes. If crude oil becomes more expensive internationally, then it means the subsidy removed will creep back into the equation. If price of crude oil remains the same, but the exchange value of the naira diminishes, then of course we spend more money bringing in the products, and that means if we maintain the old price at the petrol stations, it means then that there is some provision for subsidy somewhere. So, and I want us to put it in perspective. There is nothing patently wrong with subsidy. What might be wrong here is the way we manage it, which means that is something that exists all over the world, even today as we speak in petroleum products. And it is handled transparently. And of course, there's accountability. So I don't agree with the narrative posted by the GMD of NNPCL. Because the reality, the economics of it is that it is costing us more to bring in refined products. So if the government says we don't want Nigerians to pay more because of where inflation rate is, the cost of living, cost of doing business, want to ensure we don't get ourselves deeper into that trouble. It's a right policy choice by the government. But it should be explained that government is intervening for this purpose, which is good for the economy.
It's a good breakdown there. Dr. Dedikwe, I want to follow up with the issue of market forces. Even with our forex market, we say we are going to allow demand and supply to run that market, and also the oil and gas market, where the GMD was saying some will sell less 2 naira, less 3 naira. But how competitive is this even for the marketers? They can't even import.
Thank you. Very, very fundamental issue. Now, in thinking about this, I ask myself a simple question. How do we treat refined petroleum products? Should we treat them as security items or simply treat them as items to be driven by the market? If it's a security item, that means it is key in our daily living and doing our business in Nigeria. Then it will mean two things. One is that intervention, in my interpretation of what government is doing now, is inevitable. Okay? Secondly, is that we may get ourselves into the situation we are as of today, where NNPC has become the sole importer. And why that's so? The reason you mentioned. If the petroleum marketers don't have access to forex, that's foreign exchange, let me make it plain for every viewer, okay? If they don't have access to that, number one, and of course, the other side to it is that they don't also, have what I would describe simply as, a free environment where the specifications are defined and you can really go into the market, get the products in, and then you can sell your product as dictated by not only the landing cost, and all the other associated costs plus your profit margin. But don't forget, private sector, they are in business ultimately, financially, to make profit. So if they add their profit margin, certainly the kind of prices we are looking at now and the cost will not be at the same level that we encounter in the petrol station. So those two elements are important. So if we want to leave both ends to market forces, certainly the price at the pump end will be higher than what we are paying now. That's one. Two is that if they don't have any preferential treatment, and I'm saying this with every sense of responsibility, if they have no preferential treatment in terms of access to FX, because we treat refined petroleum products as a security item. If we don't treat it that way, then certainly we cannot expect them to sell refined products at the government indicated prices. That's the reality of the market. So for me then, it's all about, one, if we want to run a market system, it means nobody will give an indication as to the price range for those products. I import the products, I know what it costs me. I know what it costs to also transport, pay all the various charges and the costs and the rest of it to government. And of course, I know I need to put a provision for my profit margin. So I end up with a price that ensures I will be able to generate the cash back to return and import products in the next cycle. Okay? So the importers, that is the major oil marketers, or let me say importers, are not complaining that they don't have the naira. And I want us to get that right. If the complaint is not working capital, that means the major challenge we need to address if we want the markets to drive this is access to FX. And that's the critical thing for me here.
Forex remains an issue in all of this. And I want to also ask you if you agree to that sentiment that if we start to refine in country, we might address some issues with regards to Forex, because a bulk of it goes into importing of petroleum products. Dr. Adelikpe, do you think that if we start to refine in country, this would, one way or the other, also address that challenge?
Well, very important issue you raised there. Now, the fact that we start refining in country doesn't solve the problem. For me, the question would be that if we now want to refine all the products required in country, at what currency will those domestic refineries access crude oil? If they will access crude oil in a foreign currency, the problem will remain. But if for any reason we make a decision that, look, the products are sold here in Nigeria, in Naira, so they generate Naira income for the sale of the products. So to that extent also, since we are an oil producing country, the crude for domestic refining, we sell it to these domestic refineries in Naira. Now, if we do that, that can help us resolve the issue of Forex scarcity within that, particular conundrum. Let me put it that way. So now, unless we do that, we still remain in the same situation, because it will not be any different than if they imported the crude oil from outside of Nigeria. So that is an area to look at. Then the second issue there will be, if we do it that way, that means the demand for foreign currencies to buy crude oil will be out of the FX market, which of course we know in the interplay of demand and supply, we also help to give the Naira some breathing space to regain some strength. Okay, so that is the way I think we can go about this. But if they are still going to source crude from NNPC in dollar or any other foreign currency, there won't be any change in the game.
We're getting very interesting. Now, let's delve down to deregulation itself. Many will say subsidy removal is just a face of deregulation. I think there's still a lot that we are still going to have to do to stabilize our deregulated market. But let me ask you that the challenges in the downstream still remain enormous. So when are we going to address all of these challenges and get to reap the positives of full deregulation?
I'm very happy you raised this issue. But what this points to is that the regulation is not a silver bullet. The regulation simply says no government agencies will fix prices administratively. Market forces of demand and supply interplay to determine the market clearing price, what we economists call equilibrium price. Okay, that is basically what the regulation implies. But beyond that, what other things do we need to do? And I'll put them very simply and clearly. Now, we have number one, the Odako refinery that Mr. President has given a mandate should be restored into operation by end of this year. Because it's to operation, at least to produce some products, that will reduce the quantity we need to import, even if that quantity is not significant. Now, beyond that, there's also the need, if we are going to rehabilitate all our domestic refineries owned by NNPC, then we should be looking to the near term. It will happen immediately, okay? For them to also upgrade to what we call the AFRI 5 specification. That is not something that will happen overnight. It will take time. First is to get them back into operation, and then the next is how do we upgrade them to AFRI 5 specification. That's the second one. Then we need to go to the auto gas policy. Now we have a projection there that by year 2025, we should have what we call transition from PMS to gas to power vehicles. At least about 20% of vehicles are targeted in Nigeria. So if we are going to get there, what kind of investment must we make today in terms of infrastructure? Is there going to be a need for government to intervene? And when I say intervene, if you want to convert your vehicle to a CNG, powered vehicle, the kits will cost anything between 700,000 and 750,000 naira a year. Now the question is, how many regular Nigerians will want to put out that money, even if they have it, to convert from PMS to CNG? So in that case, there has to be a deliberate government intervention in that space as well. Interestingly, that is what is happening in the most advanced countries. They were trying to follow their footpaths in terms of energy transition. So there are some things we must come to terms with as Nigerians and get away from this mindset of subsidy, conversation around everything. And we raise our blood pressure and, of course, put ourselves under unnecessary pressure, talking about subsidy. And we call it intervention. But the key thing there is that it must be done transparent. So these are issues that must also complement whatever we are doing with respect to those refineries. But don't forget also, the real game changer for Nigeria is the Dangote refinery. Because I can't put my finger on any date right now when we expect it to come on stream. But any day it comes on stream, that will be the game changer. But the principal thing there is, are we going to sell crude to Dangote and other domestic refineries in dollars or in naira? For me, that's the critical issue here. That will define the extent to which they will change the game. They will change the game in terms of volume. And whether they will change the game in terms of price, a function of how we manage that process.
All right, finally now, before I let you go, Dr. Adedipe, what is your outlook for the global oil market first, the crude oil market? It seems to be going high, considering even the war and what is also happening now in recent times. And how do you see Nigeria waving through this as we move to the end of this year?
Well, I think the issue for Nigeria is more about finding the courage to apply technology in dealing with crude oil theft. And actually also follow the footprint. But like we say in Economics 101, let me put it that way, that the demand for a product creates the supply. If there's no demand for stolen crude from Nigeria, there won't be a need for someone to supply stolen crude. So is there a way we can develop a digital footprint for the crude we produce so that if they get bought anywhere in the world, it becomes very easy to know which countries and which players, because this crude oil is, of course, refined anyway. So which refineries, which countries actually have been the beneficiaries for the stolen crude in Nigeria? Until we develop the courage to apply that principle and also bringing technology to bear, we may not get any shift in the benefits. Ordinarily, as a producer and exporter, when the price of crude oil goes up internationally, Nigeria should benefit. And that is in the split of what we produce into domestic refining of about 450,000 barrels per day. And then the difference between production and that figure is what is available for export. So ordinarily, the portion of export to fetch us foreign earnings, all right? Whereas the portion for domestic refinery should actually be refined locally here and take care of not only the domestic market, even give us a leeway to export refined products as well. So until we do that, we may not get any benefit whenever the price of crude oil goes higher in the international oil market. So for now, we are the receiving ends of both. What we have used to take advantage of the higher price is being stolen on the one hand, and what also would have been the benefit of, also getting value from that, we are not getting because we are not refining locally. So it's like burning a candle from two ends. That's what Nigeria is suffering now. And that narrative can change if we have the courage.
I must thank you so much, Founder, Chief Consultant, B. Adedipe Associates Limited, Dr. Biodun Adedipe. Thank you so much for your contributions on the program. We appreciate it.
Thank you very much for having me.